La 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 la. Me. In sooth, I know not why. Does that look at that? It looks terrible. I think I have to do it this way. All right. Does that sound okay? Can you hear me? All right, good. I lost microphone yesterday. It takes a long time to figure out it's your microphone and not something else that's failed. So my microphone I've used for years, super fancy. It don't work none. It's dead. It just died. I don't know why it died. Maybe it swallowed a fly. So anyways, guess what? It's not easy to get a microphone late at night on a long weekend. but that's, hey, I mean, most people don't work on a long weekend either. So anyway, I have microphones just laying around. I had this one. So we'll see if it works, at least on the short term, and maybe maybe I'll get a new one. So anywho, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Welcome to QuantBox Live, where we uncover the best fundamental opportunities across the globe. My name is Wayne McDonald. I am the founder, but also a Harvard-educated economist, and that's why I love doing this. If you're watching this video on YouTube, you're hours and hours and hours behind because it's 6:30 in the morning, New York time on Wall Street, and we're already doing this live. And if you're watching it on YouTube, you are 3 hours delayed, or more than 3 hours delayed. Anyways, try a trial for $8. That being said, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let me log in. Okay. Let me get into the database. Boo, 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 doo, 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 doo. Logging into the cloud. Okay, let's take a look. Let's zoom in here. Bada bing, bada boom. All right, so NASI, red hot NASDAQ. Anybody want to guess why? Oh, maybe it's the debt ceiling resolution. Could be a rabbit, could be. It's very, very favorable to the stock market, in particular to growth stocks. So you see NASDAQ ripper hot, S&P 500 ripper hot, Dow pretty good. Look at over 1%. So anyways, let's strip them out. Let's get rid of the indices and reload the scatter plot. And what? Holy smokes! Right? Look at that. Oil just cray down. All right. So let's get rid of that outlier. Let's get rid of the commodities and try to get more of a normal distribution. And that's what a scatter plot is supposed to look like. It looks all random, but again, we're eyeballing this quickly. Let me get my drawing tool. There it is. Okay, there's my drawing tool. So, all right, so you look up here first, and all of these things are up, but not expected to be up. So you can see right away, euro dollar shows that US dollar is a little bit weak. Pound dollar shows that the US dollar is quite a bit weak. And in the past, you might have been selling these things, but now they're up today. Okay. In the past, you might have been buying these things, but they're down today. Everything over here is fine. Okay. Those are basically last week's trades to the downside. These are all last week's trades to the upside, and they're all working. So all of these are right as rain, right as rain. So, this shows some dollar weakness. 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 So apparently the US dollar is weak in the moment. Okay, and that's indicative of that risk on. Okay, so the bigger outliers today are like euro dollar, pound dollar, I guess. Okay, USD Swiss franc. So all the dollar pairs seem to show US dollar weakness, and that's out of position. So maybe we look to buy the US dollar later today. But remember, this is fundamentally based, news based, where we have, well, it's not a new law, but it's like a proposal for Congress and Senate to vote on as far as the debt resolution. Look at this. I have this mic in front of me. Well, the mic stand, but no microphone. Isn't that funny? Like, that's weird, actually. I'm talking to an empty microphone. I don't need that now. All right. So, anyways, yeah. So there's a reason and a rationale for these outliers. So you don't want to. It's like technical analysis where you don't want to just blindly buy and sell something just because like there's a, I don't know, an oscillator crossover. You don't want to just blindly buy and sell something just out of, you know, fundamentals. Let's say there's a rationale to all these things. And yes, this shows that dollar is unusually weak, but there's a reason for it as well, and that would be the agreement on the proposal for a debt ceiling solution. Anyways, looking at the stock markets over the last few days, it's been quite good. All stock markets are up around the world. Yeah, showing a little bit of dollar weakness in here the last couple of days. So let's look at the dollar pairs, I think, is where I kind of want to be at. Also, the yen pairs seem to be doing pretty okay. There's some that are just slightly below break even. Many of them are at break even. But we'll look at them. So let me shrink that. And let's go to our charts. And sure enough, US dollar is weak and yen is weak. Pound is gaining the most, as we already saw, and euro sort of Okay, but we saw all that in the scatter plot. So let's go to the dollar pairs. Okay, and look at that. Holy smokes. Yeah, for sure, some US dollar weakness, huh? So now we need to start identifying, are these bottoms? Could be. Okay. We're on the last day. Is it the last day? Nearly the last day of the month. I guess tomorrow's the last day. Nearly on nearly the last day of the month, we are on monthly support, making a double bottom. Kind of makes sense, right? On the last day, we're on. I don't know if that's the actual target, but remember, when we're doing technical analysis, if this is your top, and you know, of course, it's not a perfect top, this is your bottom, your projected bottom. So, you know, I've seen worse targets, but the issue I'm having today is it's basically the last day of the month. Now we have a double bottom, and for bulls want to buy at 65. Yeah, bulls want to buy at 65. Now, I might disagree with them after it made a lower low. I wouldn't want to do that as a bull, but someone's bound to do this, where a bull is thinking, okay, that this market's going to reverse and head all the way up here and a little higher. So I'd be careful. Bears want to sell it, you know, closer to, you know, 66 to 67. Well, dude, that's quite a few pips away. So you got to be careful. There could be some legitimate bulls here today if you're a trend trader. Okay. So again, you could do this. You could. That's what it says. And today we have US dollar weakness. So that's Aussie. Okay. US dollar weakness would push this down, and we're stuck in a range. Okay. Nobody really wants to trade this, but if you're going to continue with US dollar weakness, you're going to go up to this 21 EMA, roll reversal, and drop it like it's hot. That would be the trade plan for the day. Zipping over here, euro dollar. It is on target. Okay, that is the expected bottom. So again, bears that sold here at the beginning of May. Here we are on the second last day of the month, and we are on target. This is profit taking, profit taking, profit taking. If euro dollar goes up for the rest of the week, I don't think actually anybody is buying euro dollar. And you're like, well, why would it go up? Because all the bears are supposed to take profit at this price. We knew this 4 weeks ago. You're like, how do you know? That's what we call technical analysis. If you don't know that, then you need to take a course. Okay? Now, the bigger question is, will bears sell again? And the next opportunity is way up there, like 108.5. So we're 100 pips away from the next sell zone. And of course, that may never actually happen. You always run the risk of a reversal. But the point is, this is not a good place to sell. And counter trend traders are going to try to take this up at that price. And of course, they're going to scream and cry around the rally of debt ceiling relief. So it actually makes sense. But again, I think it's going to be, if you see pound dollar up, euro dollar up, all that kind of stuff, if you see Kiwi dollar up, there's a high likelihood it's just profit taking from bears. Okay? Bears covering their positions and getting out. Okay? All right. So same thing here. Although pound hasn't really done anything, the expected outcome of pound is this price here. Okay, let's call it 123.5 was the projected bottom for the month. We knew that weeks and weeks and weeks ago. Okay, we call this an Arctic turtle, where it went a little bit farther to catch the weekly target, and then boom, back above the monthly. So that trade is done. And once again, this big green candle showing US dollar weakness, but a lot of it is probably short covering, profit taking by bears. And around the rally of the debt ceiling, it's a relief, like, oh my goodness, we don't have to worry about that anymore. So it looks like risk on, but I'm not entirely sure it is risk on. But that's the problem that we have as traders, is we don't know if there's been a giant shift in sentiment and that this will lead to that. But if you're a bear, everyone else is taking profit. Maybe consider the same. Okay. Now, how would a bear come in? Well, a bear would come in at 124.5 to 125. Observe a reversal pattern and then take it back down in the direction of a long-term trend, which is risk off. But again, a potential fix to the debt ceiling problem is a risk on relief rally. Okay. And Kiwi ain't going up. Okay. It's very, very, very weak. And so even when the US dollar is weak, nobody wants to buy it. So, well, I guess we can look at it for a potential sell. If suddenly dollar strength comes back, that's probably the one you're going to take. Let me delete this. On this 4 hour, normally you would do something like this, but that's a pretty aggressive trade. The more conservative one is higher up and down. I don't know if anyone even wants to trade this. Okay, take a look at yens. Our bias for this should be up across the board. I double topped on this, and this is very, very scary for a bull. Very, 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 very scary. We have double topped at 140.5, and this is the exact price that if it double tops, and it might have double topped, a bear will want to engage to the downside. So at the very least, while I observe this today, I'm going to lock in some more profits. I moved my stop again yesterday. I'm going to move it 1, 2, 3, 4, 5 more PSAR dots. And now I have 450 pips locked in, worst case scenario. Slow as molasses, huh? Yeah. But that does bother me. So I might just bail on it if we breach that 21 today. Because if I was a tough guy, I would say, oh, don't worry about it. It's just going to come down here and then, go this way. Or I can just put the money in my pocket now. And if it does fall, I can buy it back later, right? Depends if I'm trying to get glory or profit. Okay. And he says, hey, the Bank of Japan and the Minister of Finance held emergency meetings this morning. Sweet. Okay. Well, if price comes down, I'm out. That's all I know. So hopefully they have an emergency meeting and it benefits me. I'm like, thanks, Billy. Thanks for waking up early to make me money. I appreciate that. I'll give them a thumbs up on the video. So what about everything else? Okay. Pound says it's okay. I don't have to worry about it. Okay. Look at this. We're way outside the targets. Like, guys, look at this. We're way above this. So every single pair seems to be the same or similar story, at least. That's the bearish price in which a bear wants to take it down, but they have to have a reversal pattern first. We don't quite have it, but it doesn't mean we won't get it. Okay. And on the flip side, bulls are looking for out of position trades and they want to kick it off this 4-hour 21. Which one's going to happen? I don't know. That's my job today, to observe and either take my profit or get out of the way and let it run. Okay, Kiwi, nobody wants to buy it under any circumstance, so it ain't working there. This is that USD yen. Remember, US dollar's weak today. So that's why I want to look at what the other ones are doing. Is pound yen going to go up today? Is euro yen going to go up today? Is Aussie yen going to go up today? And if the answer is yes, then I'll let this run. If they're coming down, give me my money. Okay. Because I think I'm sitting on 700 pips profit. So I might as well pocket some of those, huh? And yeah, and so here, let's go back to this one. Okay, if this one is up, and notice, by the way, the 382 hit the 1618. Isn't that cool? We did this at FX Boot Camp. I think it was a swing trade 3 weeks ago, or 2 weeks ago, and we were talking about how technically it was fine, but fundamentally there was some challenges to this trade. Well, it did 618 to 1382. Okay, which is kind of interesting. And now it's having challenges making a new higher high. Okay, that says, Wayne, if this can't make a higher high, then don't expect your US dollar yen trade to make a higher high. So take profit. So I got to pay attention to that. Got to pay attention to Aussie. Once again, we're looking at a perfect swing trade. Here was the entry. There was the projected exit. This worked beautifully. Okay, now we're riding a 4-hour 21 and we're slightly out of position. And so if this one makes a higher high, I'll probably stay long USD yen. If this collapses, give me my money. I'm going to get out. Because now we have correlation across the board of Japanese yen strength, and I'm a bear. Okay, now, guess what? I want to look at two things. Don't let me forget about oil. But I'm long that USD yen, but I was hedged, if you remember. Let's take a look at the hedge now. It looks better now. Right? It looks better now than it did. Yeah, check that out. So I'm actually selling dollar. I'm long dollar versus yen, but I'm short dollar versus Mexican peso. And now we're all the way down here. So that's worked out really nice. It was a good hedge. So I've switched teams on this pair where I'm selling dollar and US dollar is weak today. Cool. And so for that, I'm just really picking up the pips and the swap. So if we look at that, so now I'm up 210 equivalent pips. It might be 2,000 pips on peso, but if it was a euro dollar, okay, that'd be a 200 pip move, which is really nice. And even though I've been in it for only a week, I've made $10 in swap. So again, well, is that a big deal? Well, if you're in it for 52 weeks, that's 520%. Yeah, that's a big deal. 520%. That's a good bond. I don't plan on it being it that long. But the interesting thing is when we saw the dollar pairs and the yen pairs hit projected target profit targets, I hedged it by then selling dollar. You see? And now a week's gone by, now it looks smart. Good. It'll look dumb at the moment, right? It looked dumb at the moment. But again, it just had to do with the technical targets for that kind of stuff. And then, of course, I just want to quickly look at oil because it's such an outlier. Go to commodities. Okay. And it broke that trend. Okay. So you got to be careful. It broke the angled trend, but I'm a stronger proponent of horizontal support and resistance. And so we made it to this bottom of the range. And so if we break below that bottom of the range, yeah, you would have to become a seller or exit the market. Okay. I'd still like to buy this, but I don't have to buy it this week. You understand? So if it makes a lower low, as they say in Canada, I'm out, eh? Cool. And where's my QB? And let's just quickly look at, open this up. We'll look at commodities. We'll look at oil. Okay, so it's down today, hard. It's a hard down, but institutional traders are long, retail traders are long, technical analysis, again, y equals mx plus b is still bullish. Okay, it's a hard down right now. Price has taken a nosedive recently, and that's not supposed to happen till June, July, really closer to July. And it's already taken a nosedive, so it's kind of out of position based on what it usually does. Okay. By the way, this 20-year blue line that shows peak oil prices, I uncovered that 20 years ago. Well, not 20 years ago, probably 15 years ago. I gathered 50 years of data, had it analyzed, and found out that when oil prices tend to go from the highest to down, peak oil price, not peak oil inventory. And now with QuantBox, I can just very quickly get that information automatically. But that used to take days to calculate, to gather the data, format the data, analyze the data, get an output. Used to take days. It used to cost, let's say, $1,000 worth of work. Now you just look at QuantBox and an algorithm does it for you instantly. Oh, look, there's peak oil prices. And so you can see our current drop is a couple of months. So maybe there's one more sort of up before the down. Maybe. So I've gone too long. I'm trying to keep these sessions under 20 minutes so the videos aren't so long, or the size of the videos aren't so big, so I can upload it more quickly. So hopefully that's it. Have a wonderful trading day. See you soon. Yeah, 24 minutes and 26 seconds.